just outside of that range. You see that? Look at the bodies. They're small. Okay. This is for your notes. Even though the bodies are technically outside of that inefficiency, look what they formed. See that? Two little twin ball bearings. Okay. Little tiny little shish kebabs with the last little piece of vegetable or meat on the end of it. Okay. So that's not meaningful to me. Now, if the bodies were like more longer than that, not these little nubs, okay, these aren't to me upsetting. So I would look at this to anticipate higher prices. It runs higher, immediate rebalance here, upper quadrant of the inefficiency or fair value gap, trades back down, touches the very high of it here. Is this indicating bullish order flow based on how I'm teaching you how to read price action? No gimmicks, no retail stuff, no looking inside the candlestick and what's the number of orders that was bought and sold here. We don't need all that stuff. We don't need any of that stuff. Okay. We're in the trenches. This is what we're looking for. Okay. Very clear indications that market is supporting every PD array that would usually see higher prices. We're seeing that illustrated here. Then we had this price run up here and leaves that high. This is an order block. This down close candle that sends price up in here, we have a change in the state of delivery. It runs, but it leaves an incomplete run to liquidity with this high. So what we have is a order block there. This order block is parent. Okay. This order block is a propulsion block. It's the last down close candle, part of this series of down close candles. What is this candlestick doing in relationship to this one? It's trading inside of it. Does it breach or go below mean threshold? Mean threshold is the halfway point of an order block. Okay. It doesn't do that. It's up here. Half of this range would be viewed like this. It's your full range. There's mean threshold. It didn't get to it. That's the minimum criteria for a valid propulsion block. Propulsion block is an order block. Go to month 4 content of the 2016 playlist of my mentorship. It's all free. They're all my paid lecture notes. Okay. All those lectures, those videos, that's what that stuff is. Okay. A lot of people out there trying to sell it to people that are just silly. They just don't realize it's literally on my YouTube channel. So we have order block, then it trades into it here. This is a propulsion block, meaning that once this candlestick trades above, I'm sorry, once this price action trades above its opening here, there should be an extrapolation to the upside. It should be quickly, it should run away, which is why I named it propulsion block. Yes, price did shoot all the way from this order block here, but if you get it shown in this way, where there's 2 candlesticks that represent an order block, the second one is a propulsion block. It's like rocket fuel. It's like throwing gasoline on an open fire. What happens? And as Eddie Murphy said, now that's a fire. So we have the market rally up. We have this small little SIBI, okay, from this candlestick's low and this candlestick's high. Normally, if it was a bearish market, this trading up into that right there, that would indicate what? Looking for a short to see price go lower. But we have all this backdrop in here where this is simply just a turtle soup. It traded below that previous low. Forget the S&T for a moment. You don't need the S&T, okay? For people out there say, you got to have S&T. You don't. You don't need that. But it's a nice little qualifier. It tells you that there's a crack in correlation and something big's about to happen. Well, if we're trading on intraday charts, we're not demanding that it trade, much more significant by trading going long on the NASDAQ. The short was done today in the micro NASDAQ, and the long was in the ES micro. So inside this little area here, this wouldn't be seen as a shorting opportunity. This would be used as an inversion fair value gap. And you can watch that video. I put it on YouTube today. It's about 17, 18 minutes long. It's at speed. And I'm not sure what happened. The audio, when I'm using Camtasia or uh, the screen recording apparatus. I'm not right now. I'm using OBS because it streams live right to YouTube. When I'm not doing live streaming, I'm using Camtasia Studio, and it's by TechSmith. Okay, and I've been using them for a long, long time. And sometimes if I start the recording and I don't do the clap my hands or snap my fingers like that, what that does is it syncs the audio with the video. Because if you don't do that, sometimes this apparatus will start recording one or the other, and then the audio will lag. And because I was in a hurry, I didn't do any kind of adjustments. I just, once it was done, I compressed it and then uploaded it. So I didn't bother to notice that it was a little bit slightly off with the audio. So it looks like I'm not talking about the right candle at that same time. Just bear with it, okay? Sometimes it happens, and I didn't have the luxury of going in and correcting it today. I had family stuff to take care of. So anyway, it's kind of like if you remember how watching old movie production, and I guess it still goes on today, where they had that little board with notations and what scene it is, and they had that little portion at the top where they open it up and then clap it closed real quick. That's to sync up the audio and the video so that way production can see where they're at to match. Well, that's what Camtasia is actually doing, and I didn't make any noise at the beginning of the video to let the video and audio sync up. And if I don't do that, it creates that problem you have today. And I apologize if it's something that drives you nuts, because it would drive me nuts too. But there's no refunds when it's free, right? So sell sign and bounce, buy sign and efficiency. It's not a short. It's a, let's see if it trades outside of it. It does on this candlestick. It closes above the high of that gap. And then trading down into this inefficiency, inside of this order block, okay, changing the state of delivery, it becomes active. As soon as this candlestick's open, is breached right there. Notice it doesn't have to do it on a closing basis. That's order block theory. It's not anything else out there. Okay. Nobody else can claim this is what it is. No, you're bullshit. Okay. You're bullshit. Okay. $5 million. Bet me I ain't got $5 million, motherfuckers out there talking about I ain't got $5 million. You're full of shit, man. Ain't nobody collecting no $5 million because they can't find my shit being taught anywhere else prior to me with this logic. It ain't there. And nobody else has this until I brought it out here. But that change in the state of delivery, that opening price right there, as soon as it breached it, that validates this as a propulsion block and specifically an order block. So once it does that, now we can look back inside of this gap. Where's the consequent encroachment? Blend both things. Two things are happening here, okay? This price validates this range. It's a propulsion block. There should be extrapolation to the upside. Quick run higher. Validated by that opening price. It ticks it on like a switch. And then any retracement here needs to do what? It needs to stay in the upper half of that gap. Does it do that? Yes. It opens, trades down, then goes up and closes above, changing state of delivery. So now, anything past this, it can touch, it can go in the upper quadrant, it can wick to the consequent encroachment, it can wick to the lower quadrant, it cannot leave a body below consequent encroachment to keep this valid, to keep this whole setup valid for a long. Consequent encroachment nails it, upper quadrant here, doesn't even go below to touch the top. And then we open here, come down, change in state delivery, can't be touched there, and rallies up, closes on an up close basis. Start looking for higher prices. And you can watch me give the commentary as the trade panned out in the recording from today. Watching for it to trade above this high, and accelerate, accumulation here, and then moves higher, and then runs to the high here, taking out the session high here. And I said I didn't need it to trade the consequent encroachment of the regular trading hours opening range gap. This is easy, low hanging fruit objective, and bada bing, bada boom. Okay, I gave you guys again as a reminder, because there was only like 900 people, if I'm not mistaken, in the Trader Roundup yesterday when I gave the assignment for taking one micro contract And it doesn't matter what you're trading. It could be the ES like it is here. It could be the Nasdaq. If you want to do the Dow, it's your choice. Okay, just because I don't trade the Dow doesn't mean that you shouldn't. I just think it's poison, and I don't want to touch it. So you decide what you